Dyer Kennedy from Divergence Analysis. We're looking at the DVAN SmartLines package on the TradeStation trading app store. Looking at a 5, 15, and 60-minute chart on the ES, the S&P E-mini futures contract. And I wanted to go over a specific trade setup that we see very often with the SmartLines package and how we would identify that, enter and exit. This is a trade that we saw on August 2nd. These are all New York times. I want to identify the trend by using the 60-minute model, and then the 5 and the 15 will help serve as confirmation and a little quicker and more precise entry point and exit point for the trade. Once again, this is DVAN SmartLines package on the TradeStation trading app store. We have the SmartLines cycles, the DVAN short-term cycle, and the DVAN long-term trend that are incorporated into that package. So let's jump right into it. You can see that the market falls at this is the Europe opened at around 4 a.m. So coming in to the day at 9 a.m., 10 a.m., coming into the U.S. Open, we are already in a confirmed downtrend. We can see that from multiple indicators that we have in the package. One would be we've broken below the pivot line, which is the ultimate point of support here. We're in a selling cycle, as you can see by the red shading indicating a selling cycle. The short-term cycle below is red histogram showing short-term downtrend, and also the leading line has been broken through zero, indicating the force is also to that side. Lastly, the long-term trend is showing us a bearish bias. So upon entering in the morning, we would note we're in a bearish or a selling cycle. And one particular setup that is very advantageous to take advantage of in the SmartLines cycle package would be, as you note a particular trend, so in this case a downtrend, we would watch for a retracement back up to a major level of support or resistance. Support if it was an uptrend, but in this case resistance because this is a downtrend. As I mentioned earlier, the main point of support and resistance throughout the buying and selling cycles is this middle line here, which we call the pivot line. So as you can see, at 9 a.m., we're here. At 10 a.m., somewhere in that hour, prices move right up to the pivot line, which is roughly 2163, 2164 area. This is August 2nd. Prices move up to that pivot line, indicating a point of resistance. The cycle is still strong to the downside. We still see everything indicating a bearish or a selling cycle. So when we see this resistance point being hit, we can move to the 5 and the 15 minute for a potential re-entry trade to the downtrend. This is the point at 9:45 a.m. right after the U.S. Open, where you see the prices moving up to that resistance pivot level on the 60-minute. Right after that, we would be looking for a re-entry short. So we want to look for a few things. We want to look for prices closing back below the support level of the pivot. We want to see the selling cycle open up. We want to see the leading line breaking through zero. We want to see the long-term trend showing a bearish cycle. All of those were in place at 10 a.m., which would give us an indication to short this as a re-entry point after the U.S. Open. We can also see on the 5-minute that this is the 10 o'clock hour here on the 5-minute chart. Everything is also indicating a short side, so we can use the 5 and the 15 for confirmation on a multi-time frame level. We have the selling cycle, we're below support. The leading line is down, the short-term cycle is red histogram, long-term trend bearish bias. So once we're in this trade, the question is, where do you get out? If you're looking at it on more of an hourly basis, looking a little bit larger term, places to look for exits would be looking at the cycle contraction and expansion. You can see at this point, the cycle is expanding back away. That's indicating that the power is still there in that down move. As soon as the cycle starts contracting again, so this top line moving down, that's 2 p.m. we can see, which is at this point, that would be a good place to start protecting at least our trade, maybe even exiting for trying to get the maximum amount of profit. If we're looking at a 5 and 15 to manage the position a little more closely, we can watch a few things. We definitely want to watch when prices start closing back into the cycle. So you can see that at this point between a little bit after noon and 2 p.m. And then on the 5-minute, it's a little bit after 11 o'clock a.m. and noon is when you start seeing prices close back in that cycle, indicating some potential consolidation from this strong downtrend. Ultimately, a good place to exit using the 5 and the 15 both is still going to be that main level of support and resistance. So entering at 10 hypothetically here, we would keep watching this pivot line, which naturally follows the trend down, and you would see where your point of support and resistance would be, in this case resistance. As soon as that resistance started breaking, which was around the 21:45 at the 2:15 interval, 2:15 p.m. interval, we would be interested in exiting this trade and looking for the next setup within the 60-minute chart. Hope that helped. If you have any questions, please feel free to contact us at info@divergenceanalysis.com. I'll include our contact information and our website in the comments below. Thank you.